Here's a question.
If I have the right, where do you want me? Well, let me get my mic.
After the first do, I do another thing. Yeah, I think you're wrong. Conservative might decide to vote for him. Well, the way I read it, I was
My name is John Ayers. I'm the chairman-elect for 1993 and 1994. George Wirch is on vacation. As a preview of today's forum, it's on Anchorage freight rates. It's a look at different perspectives. It's not a debate, which disappoints me because I was looking forward to having it billed as the great freight rate debate. Instead, each party will have about 10 minutes to provide the facts as they see them. Further, I would request that you not ask questions relating to their future rate activity of the carriers or any details regarding the complaint filed by the municipality. The prospective rate activity is really a legal and regulatory issue as well as a marketing issue for the companies. And obviously, the current complaint has legal status. So as you structure your complaints, please try to keep that in mind. The Pledge of Invocation today will be conducted by Pastor Christopher Terry of the Holy Family Cathedral. Pastor Terry, would you join us? Our greeters today were Katie and April on behalf of V. Kroll, Madeline Ercolano, and April Houston of the Easter Seal Society. I was advised by April that they were practicing merging traffic physically. There is a summer solstice softball 94 to benefit Easter Seals. It's open to any group, recreational, business, ASA teams, co-ed teams of 10 to 15 people who play 2 one-hour games back-to-back against teams of similar ability. There'll be a plaque for the first place team, prizes for individual fundraisers, and you should call Easter Seals if you need more information at 561-7325. Jeff Keck, Vice President, the Alaska Division of Tote. Tom Cowen, Senior Vice President, Sealand Pacific Services Division. Jim McKenna, General Manager for Sealand Alaska. Marge Walker, the owner of Escrow Alaska and a new member to our chamber. Escrow Alaska is a new business providing full escrow closing services and also providing SBA and commercial loan packaging. Marge, welcome to the chamber. And lastly, Pastor Christopher Terry of Holy Family Cathedral. Ladies and gentlemen, your distinguished representatives at the head table. A couple announcements for you. If any of you are interested in running for a seat on the Chamber Board of Directors, please submit your application along with 20 signatures of 20 voting members to Carol Hyman by Monday the 20th. That's the signatures of 20 voting members to Carol Hyman by Monday the 20th. Also, the Chamber is gearing up for the annual Gold Pan Awards. The program is the oldest community service awards event in Anchorage. Its success is dependent upon your thoughtful consideration of individuals and organizations who stand out in Anchorage and make a difference in our community. Nomination forms are on the side table. Please pick one up on your way out today. As we begin our program, remember, if you have any questions for any of our panelists during the program, please write it down on the recycled squares of paper on your table and pass it to a chamber staff member. Sealand's general rate increase of 6% on January 2nd, 1994, as well as Tote's and the Alaska Railroad's increases of the same amount on January 16th, 1994, were all protested by the municipality of Anchorage. All 3 protests were denied by the ICC, the Interstate Commerce Commission, and rate increases went into effect as filed. The city has since changed the focus of the protest and is no longer arguing about the 6%, but rather the entire freight rate structure. A suit has been filed with the ICC claiming that the carriers have been overcharging businesses in Alaska, with rates being raised consistently between 6 and 10% every year since at least 1976. A standalone analysis was done comparing the rates to and from Alaska with the rest of the world's routes. A hypothetical scenario or model was created to demonstrate the revenue generated. The carriers have said that the municipality's model is incorrect and the rate per mile is an invalid form of measurement, and that the revenues generated did not take into account several other factors. The numbers published are, in their view, inflated. We have brought each party here to discuss their different perspectives today. And again, this is not meant to be a debate. We will have a presentation first by Mayor Tom Fink, then by Mr. Blessington, who will be followed by Mr. Magee, and then Mr. Cowen. Once again, please remember there are certain limitations on the questions that we can handle from a regulatory, marketing, or legal aspect. Next Monday, we'll have a forum, and I'll talk to you in a moment. But at the moment, here's Tom Fink to begin. Mayor?
I thought I was going to give the review that John gave. That's fine. The one part that I guess that he didn't complete, a couple items. Back in December when they filed their rate increase, when we found out about it, and they only have to notify the Interstate Commerce Commission, so we never know about these things. And much to my chagrin, I thought I would kept up on things as mayor, but I wasn't aware that they've increased rates every year since I've been mayor, and many years before that. But I was very upset in the fact that we've gone out of our way not to increase rates at the port to anybody. We've expressly done that on general cargo. So I was disturbed, and I indicated we're going to look into it. I talked to the companies, and they felt they were entitled to it. They make a couple adjustments, but they were entitled to it. So we went to the trouble of searching for a counsel who practices before the Interstate Commerce Commission. There are none up here. The people on the West Coast, they all recommended a particular firm back in Washington, D.C., the name of Jackson and Jessup. So we hired them and asked them to, well, first of all, come up and take a look at the scene, and then determine whether or not our rates are discriminatory, and such that we could get them changed. Beyond coming up here and looking at some general concepts, that it's more expensive for a van to come from Tacoma to Anchorage than it is to go from New York City to Anchorage, even though it's a shorter distance, and even though water transportation is supposed to be the cheapest form of transportation there is. He wanted to hire an economist, so he did, and who does work in the transportation area. And they did a study and a report as to what our rates ought to be. And of course, they did come up with the idea that the maximum rate in the Anchorage market should be something like 69 cents a unit mile, and we're paying $1.88 a unit mile. And none of the other rates, essentially in world commerce, are above 70, 75 cents, but we're paying $1.88. So we felt that was the wrong amount, and so we did make a real quick filing in December, because we only got a limited time to make the filing. And of course, we had very little information, and we were turned down on a 2-2 vote. And one of the people who voted against us in December is no longer on the commission. We filed, the household goods rate increase went into effect on May 15th, so we filed on April 15th, which is a key deal, 30 days in advance when you got to file. And that one, the staff said that we're going to allow the rate increase to go in, but the carriers must come back and justify their rate increase. Within 24 hours, Sealand and Tote withdrew their rate increase on household goods. Subsequent to that, we filed our general rate case. We say their rates are discriminatory. We say they're 60% too high. The 60% just follows a model. And admittedly, there's a lot of information we don't have. It's not like a utility that has to put all the information on the table. The way the ICC operates, for a private company, it's private material. In the ICC case, they will have to disclose what they charge and what their expenses are. It, again, won't be public, but we will be able to find out what it is. We're totally convinced that the ICC will order an investigation. It's my understanding this morning the other parties were served with an order to respond in 20 days or give the plaintiff the relief they asked for, which is standard anyway, but the clock is moving rather rapidly now. As mayor, my experience with utilities has been that when I first came in office, every utility came in to me with a budget every year. It was always based upon a rate increase. And I had to break them from sucking eggs, to use the expression, because we haven't raised rates every year. We've said, you got to come and justify it. The way I see it, the transportation companies, and maybe it's worldwide, but they just like to have an annual increase in rates. And so they have, in fact, had an annual increase in rates. And I think that they should have to justify that for the ICC, and that's why we've started the complaint. And we think, you know, everyone holds firm, we'll get a good hearing, and we'll get a decent rate. In the meantime, I had Mr. Blessington as the man down to port that keeps me up to date with what's going on back in the ICC.
Thanks, Mr. Mayor. Perhaps it's worth a bit of background in order on this case prior to getting into it in some detail. When the carriers announced a rate increase in December, we had literally 2 or 3 working days before Christmas to respond to it. But in a very short period of time, we were joined by the city of Fairbanks, the Fairbanks North Star Borough in Alaska, and various chambers of commerce in the rail belt and around the state, protesting both the rate increases and the carriers' business practices. And those strongly worded resolutions and some other communications that followed basically came from communities representing almost 70% of the state's population. But before the ICC, any citizen affected by rates or rates in question can bring a complaint similar to ours. So this is not it's an unusual situation before the ICC, but it's not something that's all that terribly unusual. On June 3rd, we filed formal protests of the general cargo rates available under tariffs from both Sealand and Tote. And copies of those filings, by the way, are on your tables. And there are 2 primary reasons for these filings. First, the rates themselves, the base rates that are available here in Alaska, simply seem just a little bit too high. To us, it appears as though they exhibit the characteristics of monopolistic pricing, and that's an area where the ICC has a clear mandate to protect the public from what's called abuses of market power. Now, these comparisons, by the way, came from Sealand, and they show what that company says were their average 1993 rates on some other trade routes, as well as here in Alaska, over here in the extreme right-hand corner. Now, since these figures appeared, Sealand has seen fit to begin aggressively bidding on some government contracts in other areas around the world. And we thought you might, as soon as I get this figured out, we thought you might like to see some comparative prices where there is a good deal of competition for some government bids. In this case, in the Atlantic trades, that's from the East Coast U.S. to England, Europe, and Ireland. Sealand dropped its rates 41% on some bids to the government, and needless to say, they won that particular bid. But the long and the short of it was that they were under what was in effect a threat from the Navy and Military Sealift Command to allow Allied carriers or ships from Allied nations to begin carrying U.S. cargo to PXs and some other non-essential military users. The second thing that we think is really included at the heart of our case is that the business practices of the carriers appear to unfairly discriminate against small shippers by giving large customers discounts of up to 50% or more compared to what the small shippers are currently paying under the tariff rates. And that is something of an anomaly that really is unusual anywhere that we've been able to find out here in the United States. Tote has a very well produced graph that illustrates their rates and how they relate to their income and consumer price index since 1984. And what this particular chart indicates to us is that if you're a small shipper, you're going to pay a rate which is somewhere up in this neighborhood. If you're a medium-sized shipper, you may qualify for a volume discount, and a medium-sized shipper would be someone shipping, say, 10 containers a week. And you might get a discount 10, 12, 14%. But a very large shipper, such as a grocery wholesaler or a Kmart or a Walmart or something like that, is actually going to pay a rate somewhere down in this neighborhood. And in some cases, that's a going rate of about 50% of what the tariff rate is for the small shipper. Sealand's rates, by the way, are roughly the same as totes in this market. On some shipments between Tacoma and Fairbanks, the rate differs by as little as 50 cents. In other cases, there may be a few dollars, but for all practical purposes, the rates are basically the same. Tote says that this disparity between here and what the tariff rates are is really uncomfortable for them to see in the marketplace. They don't like it one bit, and frankly, we agree with them wholeheartedly. They say that the disparity is a result of market forces and that their revenues aren't anywhere near what the posted prices are kind of up in this neighborhood. Well, we haven't been yet made privy to any figures that would support such a position. The problem is that this up here, or something very much like it, is what the small shipper or the average Chamber of Commerce member is paying throughout the rail belt. We think that this chart, by the way, which was provided by Tote, pretty much makes our point. The tariff rates are out of line. If the contract rates prove profitable down in here, either way, small shippers are being forced to subsidize their larger competitors, or small shippers are being taken advantage of unfairly. But there's a larger question, and that involves examining the level of revenue that Tote says is down in here for their business, and presumably is compensatory for their activities. Because the carriers have repeatedly refused to divulge even simple P&L statements that might support the need for higher revenue, we've asked the ICC to question the rates of return, the penalties we pay for inefficient ships, and outdated technology, which is in use here in the Alaska trade. To examine those issues, the ICC will consider standalone modeling, and that's an analytical tool which is useful when prices appear to be set by a monopoly. Sealand's parent company, CSX, by the way, is a champion of that methodology and argues about its railroad competitors before the ICC. In this instance, we built a model with 5 brand new ships and the normal complement of containers, crews, and stevedores paid at existing rates or better. Essentially, a complete operation capable of providing the same or better service that these two companies do. And by the way, both companies, there's no question about it, do provide excellent service here in Alaska. These companies are pros at what they do, and I can tell you, down on the dock in the middle of December, they do one whale of a job for their customers. But we added up average costs, we added up some average rates, and we came up with what we thought would stand to scrutiny before the ICC when it came time to argue rates. And that indicated to us that our rates here in Alaska ought to be about 60% below what they are right now. That's a significant difference. Again, it's based on modeling. And again, it is subject to argument before the ICC because, frankly, that's what the ICC is there for. There are sign-up sheets, by the way, on your tables if you think that there's some validity to these arguments and are interested in some refunds of past overcharges that might be due. The ICC and Congress have not deregulated the shipping industry in the United States totally. Deregulation in transportation was only really a repeal of some burdensome regulation that protected carriers from the aggressive competition that ultimately benefits consumers. It's worked. In most areas of the United States, it really has worked. But the ICC has a mandate to protect the consumer from abuses of market power, and that's really what our case is about. We want to encourage competition. We want to see competitive transportation prices available to all companies in Alaska, and we want to see reduced transportation costs. As you can imagine, actions before the ICC are expensive. At least due to deregulation, they're far less costly before the ICC than they are before the Federal Maritime Commission that regulates rates into Hawaii, Guam, and Puerto Rico. But cost in these things is a relative issue. Every 1% change in shipping rates reduces transportation's burden on the economy by $3 million a year in Alaska. Just the annual savings on household goods and Canadian National's decision to not go for a general rate increase back in January has exceeded the city's out-of-pocket costs to date. We expect to hear a vigorous defense before the ICC from these companies within the context of protecting their $300 million a year share of our annual transportation costs. Who can blame them? But remember, business overhead, just like grocery bills, is higher here than almost anywhere else in the nation. Transportation costs are a major part of that differential. We believe this situation should be very closely scrutinized. Thank you.
Thank you for the invitation to address the Chamber today. My name is Bob Magee. I have been the president of Tote since January of this year. My association with Alaska extends back a little bit further than that to 1974, when I was part of a small group of Sun Company employees that helped start Tote service to Alaska. Prior to my assignment to this particular position, I was responsible for managing Tote's marine operations for 7 years. Before that, I did a stint in a similar position with a liner service in the East Coast and Gulf Coast to Puerto Rico trade. I was asked to address you on the economically, politically, and legally sensitive subjects of ocean rates. I want to say from the outset that despite the fact that we can't have a debate here today, and there are certain laws which govern what we're able to do, that if there's anyone in particular who would like to address this question privately, either with myself or members of our staff, Mr. Jeff Keck, our Vice President for Alaska, you should feel free to do so. And we're willing to do that and meet individually with those of you who would like to do that. I also have some charts and pictures to show you. We've been subjected the last few months to some very serious allegations being leveled by members of the municipal administration and the Port of Anchorage against Tote. Senior officials are claiming profitability levels of from $120 million to $240 million on gross revenues of only $300 million in the trade. There's a variety of press reports. These allegations are preposterous and untrue. In fact, freight rates to Alaska are, number one, quite reasonable. They have not kept pace with other consumer costs and are the subject of intense and continuing competition. I have a few charts now that will demonstrate my point. First, are Alaskans being unfairly singled out for consumer price increases? This chart shows the change in the consumer price level between 1982 and the current level. The upper graph is the U.S. indices, the lower for the city of Anchorage, as compiled by the U.S. Department of Labor and Bureau of Labor Statistics. About 3 weeks ago, I attended a reception in the company of Paul Richards of Alaska Pipeline Service. Paul's the chairman-elect of the Alaska State Chamber. He indicated at that reception that never in the history of Alaska has the spread between Seattle prices and Alaska prices been closer. I think that part of this is the efficiency of the transportation services that Tote provides to Anchorage. Now let's look to the history of ocean rate yields compared to the CPI. This is the graph that Mr. Blessington showed you a few minutes ago. It does not now, nor has it ever purported to show the difference between large shippers and small shippers. The upper line is the compounded effect of all of the general rate increases that have been filed over the years, 1984 to 1994. The middle line shows the CPI, and the lower line shows our yields to the ocean carrier. The yields are the gross revenues that we receive, less certain inland transportation costs and the cost of trailing equipment. They are as akin as you can get to an ocean rate, a point-to-point rate. They represent roughly 90% or more of the total revenues that Tote receives. Part of the problem with looking at this graph over the years and what has led us to this point is the business of our inability to make any kind of a general rate increase hold due to competitive pricing pressures. So you see, as the years go on, despite general rate increase after general rate increase after general rate increase, the actual yields to the ocean carrier, in this case to Tote, we don't know what Sealands are, have remained relatively flat. In fact, they have fallen on a real dollar basis by more than 20% since the time frame 1984. Once again, this graph has absolutely, positively, unequivocally nothing to do with large shipper rates and small shipper rates. This is the same graph again, but it's cleaned up just a little bit so we can talk about the history of competition in the trade. Once again, the upper line, the red line, is the compounded effect of general rate increases. Presumably, if there were not competition, presumably if there weren't a variety of givebacks, bids, etc., that have changed that curve, the upper curve would have held true. And part of the fallacy of the administration's argument is that they have looked at these general rate increases and assumed that the ocean carriers are a monopolistic public utility. We are not. When we file for a general rate increase, the rates don't stick. Hence the ever-widening gap between the compounded effect of the general rate increase and the yields that the ocean carriers are seeing. Now, if you look at the period 1982, 1983, at that point in time, one of our competitors, Seaway, decided to build some tugs and barges for the Alaskan trade. On an indexed basis, they made that decision when the index was roughly 95%. Those barges and tugs were delivered to Seaway in early 1984 at the peak of the rate levels and yield levels in the Alaskan trade. Sealand at that same point in time was making a decision to add some new tonnage to the Alaskan market. The post-pipeline boom started to fall off. There was an overcapacity in the trade, and what you see are the effects of that competition. By 1985, the general rate level and general yield level had fallen to about 82% of the index. At that point in time, Seaway, the low-cost carrier, primarily a non-union operation, tugboats, seven-man crews, barges, declared bankruptcy. That bankruptcy enabled that company to default on their fixed capital payments for the tugs and barges. The tugs and barges were financed under Title 11 guarantees issued by the federal government. When they defaulted on the bond payments, the federal government picked up the tab, paid for the tugs and barges, and Seaway was able to continue an operation for almost an additional year. When the rates fell by 1986 to an index of about 80%, and they had to cease operations, being unable to meet their variable costs. At that same point in time, 1984, in addition to the Sealand decisions and the Seaway decisions, Alaska Hydrotrain added some additional roll-on, roll-off trailer capacity to their existing ro-ro rail barges that served Whittier. They stayed in that business all those years up until late 1992, when, because of the combination of rates and costs in the trade, they simply went out of that business as well. In the intervening period, you can see the impact in 1989 of the Valdez oil spill, which jump-started the economy. And finally, in the period July 1990, for a period of 11 weeks, one of the tote ships was out of service due to a flood. Once again, during that entire period of time, with this competition, every year, Tote, Sealand, Seaway, the carriers in the trade, filed for general rate increases. Never once did they stick, and there was an ever-widening gap between the apparent rate increase and the actual yields to the customer. Now, Jeff, would you put on some of the... As opposed to ocean carriers, public utilities do not suffer from competitive pressures. What we've done here is to overlay the municipality garbage rate increases from 1982 to 1993. Those increases all stuck. Secondly, the sewer rate increases. Each one of those also stuck. There was never any give backs, no competitive pressures brought them down. The electric rates, you'll notice they're substantially above the GRIs, I'm sorry, the net yields. And finally, last but not least, the municipalities' water rates. All of them substantially above the yields to the carriers. Once again, when a public utility files for a rate increase, there are no competitive actions that cause that to fall away. Now, before you remove those graphs, in all fairness to Mayor Fink, I have to point out something. You'll notice that those curves do bend to the right during the latter stages of this period. So although there are no givebacks and no reductions, one could conclude that at least the level of the increases has sharply decreased over that point in time. Nonetheless, they are substantially above the yields to the ocean carriers. Last but not least, let's talk a little bit about competition. Last winter, Matson Navigation visited the Port of Anchorage, and Efren Sanchez met with Matson employee, met with officials from the Port of Anchorage to inquire into the economics of serving Anchorage. Matson Navigation is a large, publicly traded corporation which operates in the Hawaiian trade. They've got approximately 70% of the business. They've got a large fleet of vessels, 10 or 11 ships. They had a couple of extra ships left over, an existing terminal in Seattle, which is employed only approximately 20% of the time. They put together an analysis of the costs and benefits of serving Alaska. They also looked at several other trades, including Puerto Rico, including taking up tonnage in the Hawaiian trade. And the results of their analysis were that the competitive prices and costs are such that it is more profitable for them to enter the Pacific coastwise trade directly in competition with West Coast railroads and with Interstate 5, that results in a more profitable situation than does competition in Alaska. The seaway barges that went out of business back in the 1980s, there was nothing wrong with that equipment. There was nothing fundamentally wrong with what was going on there. Those barges were towed around to the East Coast through the Panama Canal. And at the investment of several millions of dollars in terminal facilities and new ramps, those vessels have been in the Puerto Rican trade now for 4 years, operating very profitably, loaded and discharged by union labor and another trade. Finally, last but not least, the question that I get asked the most is, if these numbers are correct, if these yields are correct, if the information related to the competitive pressures in the Alaskan trade are accurate, why don't you guys just go to the ICC, let these people investigate you, let them prove what you say is true, then everybody will be happy and walk away from the situation. Now, there are three major reasons why we would prefer not to go through that process. Number one, the discovery process could force the disclosure of very sensitive financial information of a small employee privately held company to a very large international corporate competitor, that's Sealand. Number two, the drain on our management time, focus, and resources would be enormous. The whole burden of proving our case before the ICC really falls to about 4 individuals in our pricing department. We simply don't have the time and the resources to be flying back east to Washington, D.C., week in, week out, to prove to the ICC what we say is true, particularly in an era of deregulation, where competitive pressures are supposed to take the place of regulatory resolve. Last but not least is the cost. To date, we have spent more than $125,000 on legal fees back in Washington, D.C. This process through the fall should cost each of the carriers in the trade at least $500,000. The city is already north of $200,000. It's a very, very expensive, very, very time-consuming process. One last issue. If the revenue figures that the city has proposed, the 60% overcharges, are anywhere near correct, the $120 million charge, the $220 million charge, the $240 million charge, are anywhere near correct, The real issue is, where are the shippers? The shippers that are involved in marine transportation in the Alaskan trade tend to fall into a variety of categories. Some of them are large international corporations doing business all over the world, people like Kmart, Walmart, some local firms, large sophisticated firms like Carr-Gottsteins, some of the smaller shippers who deal with consolidators that move trailers in 40, 50, 60 trailer lots per week, the major automobile manufacturers, Ford, Chrysler, Toyota, Nissan, the federal government, the United States Mail, the Military Seat of Command. These are all organizations that ship in other trades like Hawaii, like Puerto Rico, some of them in the foreign trades. Where are these people? If they were being built out of $120 million a year, don't you think that $500,000 worth of legal expenses would be a small price to pay for a redress of their actions? I think that's all I have to say. Thank you very much for your time.
Please leave the lights on. Good afternoon. My name's Tom Cowen, and I hold the position of Senior Vice President for the Pacific Service for Sealand, and as such, I have senior accountability for the Alaska Service. I think most of you are familiar with this article from the Anchorage Times. Sealand has been tried in the press by the municipal administration on the basis of speculation and vague, unsupported claims. I'm here today to wage a battle for public opinion on the side of reason. While I would not characterize their public statements as malicious, the administration and their consultants did not do their homework very well prior to developing their charges. Sealand has been providing Alaskans with quality transportation services since 1964. Today, we employ over 350 people in the state of Alaska with an annual payroll of $22 million. We are proud of our commitment to Alaska. Alaska has traditionally been a boom-bust economy. Sealand has been here through the good times and the bad, and we will continue to be here. We have an unrivaled 30-year history of year-round multiple sailings. We have an unmatched record of investments in vessels, equipment, and technology, and we are committed to continuing to provide Alaskans with comprehensive and reliable transportation services at fair and reasonable rates. There have been allegations that Sealand's 1993 revenue in Alaska was $400 million with profits of $240 million. I wish it were so. Actual revenues have been significantly less. While it is corporate policy not to disclose revenues or profits of individual business units, I can tell you that our Alaska revenues are less than half of $400 million. I would guess that $400 million is probably higher than the annual revenue for the entire trade, including liner and barge operators. Turning to profits, alleged profits of $240 million is utter nonsense. With revenues of less than $200 million, how could we have profits of $240 million? Please listen carefully. I do not know the profits of our competitors, but I can make an educated guess. My guess is that $240 million exceeds the cumulative profits for all carriers in the trade for the sum of the last 10 years. One has to remember that shipping is a high-risk business. Events such as major mechanical breakdowns or labor disruptions, such as Sealand recently experienced, have a severe impact on earnings. Some years carriers make reasonable returns. Some years they make practically nothing or even lose money. There have been allegations that Sealand's Alaska revenues have been used to prop up the rest of our company. This is totally untrue. Alaska service revenues are less than 6% of Sealand's total. Simple math would tell you that less than 6% of the whole could not support the tremendous overhead of our worldwide network. Let's look at the overcharge claim. It has been publicly stated by the municipality that Sealand has been overcharging the trade by 60%. This is patently ridiculous. The cost per mile analysis that has been used by the municipality is incorrect. These allegations were flawed in how they were calculated and in the methodology that was used. The following numerous points were not even considered. Stevedoring, terminal, port costs, and general overhead are basically the same regardless of the distance. If we sail a ship a short distance, say from Tacoma to Seattle, or from Los Angeles to Yokohama, the overhead cost allocations are the same. The fact that Alaska is a one-way trade was not considered. For every 100 containers loaded that are shipped north, approximately 77 return south empty. Almost all of the lanes we operate in the world are two-way trades. As you know well, there is more fluctuation in volume because of seasonality in Alaska than any other trade we operate in. This is because of construction, tourism, and fishing seasons, to name only a few. Vessels that are built to handle second and third quarter volumes have hundreds of empty spaces in the fall and winter months. From a pure volume standpoint, we could serve Alaska once a week with vessels twice the size. However, the retail nature of this market demands more frequent sailings. It is simply more expensive to operate smaller vessels with multiple sailings per week than it is to sail larger, efficient vessels with less frequency. And the Alaska volumes are small when compared with other major marketplaces, such as Asia or Europe, so fixed costs are again spread over a smaller base. And yet the Alaska trade demands extremely high service levels. In most trades we serve, transit time is measured in a matter of days. But in the Alaska trade, the standard is in hours. This results in constant extra costs for such items as overtime and increased fuel consumption. Sealand has invested millions of dollars in specialized equipment that is used almost exclusively in the Alaska trade. Much of this equipment, which consists of flat rack containers, insulated containers, and specialized car carriers, sit idle during the off-season. Our Alaska ships are specially designed to handle the severe winter weather conditions in the Gulf of Alaska and Cook Inlet. The municipality's cost analysis overlooks major expense categories such as documentation, rating and billing, accounting, sales and marketing, computer and systems costs. Also not accounted for were maintenance costs for our containers, our trucks, our cranes, and our ships. Inland costs, both truck and rail, were completely omitted at both origin and destination. For example, neither rail expenses from Chicago to Tacoma or trucking from Anchorage to Fairbanks were considered. Such expenses cost millions of dollars a year. The bottom line is that our rates are not excessively high. In fact, they have not even kept up with inflation. You're now becoming familiar with this type of chart. Although this red line on the top is difficult to see, it represents the Consumer Price Index in Anchorage over the past decade. You'll note that this line goes up 33% over 10 years. On the bottom is a representative reflection of Sealand's per container rates over the same period. And as Mr. Magee explained very well, you can see a similar dip to what Tote showed in their numbers. And then it flattens out, then it starts to come back up. There were only 2 years, 89 to 91, when the freight rates came up at a similar pace with the CPI index in Anchorage. And over that 10-year period, Sealand's rates have increased by only 11%. In closing, we've had a short time to discuss a very complex subject. I want all of you to be aware that the process of a formal complaint that has already been filed with the Interstate Commerce Commission is very time-consuming and very expensive for all parties involved. These expenses are coming from your public funds. I would also like you to consider what the real question is here. Is this really a question of rates, revenues, and profits, or is it all being driven by political motivations? Thank you.
I appreciate your indulgence, folks. It's an important issue, so we're going to run over just a little bit today. First question I have is for Bill Blessington. Bill, why do you find it an anomaly that volume shippers get lower rates? Isn't this common practice, and who are the small shippers the municipality is seeking to protect?
To answer that question, it's not an anomaly for a volume shipper to get a better rate than Joe Sixpack, if you will. The problem is that the percentage which goes to the volume shipper in this particular trade runs as high as 50%. In overland transportation and in many marine situations worldwide, when you're dealing with container traffic, 3, 4, 5, 6% is more along the lines of what a large volume shipper can expect to pick up. And a lot of that's due to economies of scale, and it's understandable. But when you get into the 50% range, then you're going to run into a situation that's a little bit different.
And while I have you, question is, what are the legal fees to date for this filing, and what are you budgeting for the total process? Either Mr. Mayor or...
We've spent about $200,000 so far. We anticipate that, we don't know exactly what it's going to cost. We think the $500,000 figure that Tote has estimated is probably a good figure.
Okay. And Mr. Blessington, one more. It says, does your chart listing $1.88 per unit mile take backhaul rates into account or the lack thereof?
Could you repeat that question?
I just read them, though. I don't translate. Okay.
It does. It surely does, yes.
All right, so the backhaul rate is
The
included.
important thing is in the 69 cent, in making up the 69 cents, they figure total cost whether the ship is full or empty. They know how much freight comes up here and how much goes back.
So you're saying this would be the aggregate rate?
That's right.
Either direction. So
That's Sealand's number, by the way. That wasn't ours, at $1.88.
all right. Mayor Fink, there is a question here that you may want to respond to since it was asked. Is your motivation for this filing politically oriented, or is it for the real serious concern for the ratepayers of freight rates?
Well, I welcome the opportunity to respond to that. What the freight companies have set up to that little bit of language I thought was pretty good. It certainly is not politically motivated. Mr. Jackson, I informed him when we brought him up here that if we had a case, we wanted to pursue it. If we didn't have a case, we didn't want to just be harassing private business. This administration has tried awfully hard not to harass private business and tried to help them. So I think it's unfortunate that Sealand made that remark.
And again, for Mr. Mayor, does the marketplace and competition provide the checks and balances necessary to prevent gross overcharges by my business? I'm not sure whose that is. If this is generally the foundation for our capitalist economy, why has this mechanism failed to, I guess, operate in this situation as you appear to suggest?
Well, if competition does work, of course, that's the best system. That's what we're in favor of. But if you follow the pattern of what has happened, it's hard to believe that it's highly competitive. Each year, Sealand comes through with a rate increase. Within 2 weeks, Tote files one, and a month later, the railroad barge files one. In the case of the household goods, where we protested, Sealand withdrew their rate increase. Same day, Tote withdrew their rate increase. So, if the pattern that we can see, there may be, or we may find out when the investigation occurs that we're wrong, but the pattern that we see is there isn't any competition. One just immediately, the big one sets the rate, and the smaller one goes along, and then the smaller one goes along.
All right, that is a good play into this question for Tote or Sealand, or both of you, if you choose to respond. Why did you withdraw the household goods rate increase?
Tote withdrew the household good rate increase because Sealand withdrew it. The carriers, in order to be competitive, have to match the lowest rate in the trade. If we had not withdrawn the rate increase when Sealand withdrew it, we would have lost all of the business. Nobody's going to pay Tote a lot more money to move household goods than Sealand.
As I think is
There you go.
As I think has been said today, The ICC did not turn down the rate increase. However, they did refer those rates to an administrative law judge. We elected not to pursue this case before the law judge on the basis of one commodity in the trade, because we felt that this kind of filing on the whole trade was coming, and we felt it was far better to deal with the issue while addressing all of the rates in the trade, rather than spend a lot of time and money talking about one item and then have to do it all over again.
A question for Mr. Magee. What do you mean by yield on your charts?
Yield represents the cost that we charge the customer, less certain inland charges, and less the cost of trailing equipment. It's a measure that the carriers, it's like seat miles in the aircraft business. It's the measure that we use to determine our return on the rates. The total yield represents probably better than 90% of the rate charges.
Okay. And the last question I have is for Mr. Blessington or Mayor Fink. How and where did you get the numbers, obtain the numbers for your standalone model?
Those were done by a company called Peabody and Company. It's an old-line American company that does economic studies on transportation. They came up with those figures. Not we didn't come up with them. And you know, they're competent in the field. I don't know anything about race. He doesn't know much about race. He knows a little more than I do. But you know, our attorney suggested we hire this firm to do a study because we couldn't get the information from the carriers. So one way of doing it, I'm told, is to come up with a standalone model, crank in the prices as high as you think they're conceivable, and then say the rate shouldn't exceed that. So we didn't come up with the figures. Peabody and Company came up with the figures.
Okay. And last question for the carriers. Is there some point at which it no longer becomes practical to replace your assets or add services to your services that you provide?
And the short answer is obviously yes. There is a point, and in fact, I guess the closest example that we have here in Alaska for some of you folks who've been around for a long time is Alaska Steam, when they went out of business.
Does Sealand wish to respond?
Yes. The basic financial tenet in almost any industry is that capital will go where it can be best employed, and if you cannot earn your cost of capital, you will not receive capital from the financial marketplace. So we are looking to earn our cost of capital, and this is a difficult industry. Sealand has been around since 1956. And 1993 was the first year in our corporate history that we did earn our cost of capital.
I'd like to just frame that a little bit further to give you some examples. The cost of a new ship today, roughly the size of the tote ships, is about $120 million a copy. So we've just gone through this massive capital improvement program to extend the life of our ships out to 2010. But in terms of 1994 dollars, in order to replace our ships, we would have to come up with something close to $350, $360 million. That's the ships alone, not the rolling stock or the ramps or anything. By the way, in terms of the U.S. domestic trades, in the past 20 years in the liner business, there have been very few of these ships built. The last one that I recall, Matson built one ship about 3 years ago. Prior to that, it was the three Sealand vessels.
Okay, thank you. Please join me in thanking our guests today. And thanks again to Marge Walker of Escrow Alaska, who joined us today, and to Pastor Terry. Next Monday, June 20th, we'll have a program called Cook Inlet's Friendly Neighbors, a discussion with the oil producers in Cook Inlet here at the Egan Center. I have two drawings for you today. Smoked salmon donated by Alaska Sausage and Seafood to Darrell White, I hope I got it correct, from Frontier Transportation. And a ticket to our next forum, the winning lunch ticket sponsored by Barbara Granger of Remax, and that is Sherry Wilkin of Husky Food Products of Anchorage. So, thank you very much. We're adjourned.